The sky is falling! The sky is falling! Get out while you can! Everybody sell! This sounds like the little boy who cried wolf, and in many aspects, it is exactly what is happening in the retail day trading stock market today. Jedediah Collins, I am here with the Money Vehicle Movement podcast, where we are trying to make financial literacy more current and possibly a little bit more cool. Today, we're going to dive into the interesting world of day trading and specifically talk about one short seller named Andrew Left. Now, as we are trying to translate this language of money, we got to explain exactly what a short sell is. A short is when you borrow the ownership of a stock, then you go sell it in the open market in the belief that the stock will go down. Once it does go down, you then buy back the price or the stock at the lower price and get to keep the difference between where it was and where it is today. Let me say that again. I'm borrowing shares, ownership shares of a company as stock. I'm going to go sell them on the open market. Let's say I sell them at $50 per share. I believe it's going to go from $50 down to $40. So I sell them at $50, and then as it goes down to 40, I buy those shares back, give the stock back to whom I borrowed it from, and that $10 difference, poof, was instant value created by me. Sound complicated? A little confusing? Yeah. Why don't we leave short sales to experts and people who maybe do this for a living? But we're going to talk about them here as well. Even though short selling is complicated and confusing, it's meant to be a hedge and it's meant to call out companies people feel are either fraudulent in their reporting or going to fall in value for some other variable, some other reason. Andrew Left made his name on a big short of Valiant Pharmaceuticals, where he claimed some funny business was going on their reporting and that they were actually using pharmacies they owned to receive kickbacks. This claim turned out to be true, and it gave him a name and a following as someone who could spot companies on the decline, going so far as to name his own firm Citron Research because it began to analyze the lemons of the stock market. Citron, citrus, kind of cute. Well, Mr. Leff is now being accused and charged with fraud himself, stating that he would use his website, TV appearances, and overall celebrity to manipulate stock prices in his own favor. Stating your position isn't fraud, but coming out and doing things just to push a price one way or the other and then running away from it the moment you got a little kick, that's a little bit questionable. One example of one of those shorts is when he came and claimed American Airlines would fall 50%, getting everyone worked up in a frenzy. 50% is quite a claim. And people said, well, I mean, if they're going to fall 50, they're for sure going to fall 10, 20, or 30%. And this was right after the pandemic when everybody was already a little bit on edge. He came out, made that 50% claim, and within 30 minutes after posting that claim, he received a few percentage points drop in the stock price. He made his value and his profit, and he left minutes after that claim. Now, Mr. Left is mainly known for those big shorts, but he's also manipulated prices on the growth side as well, claiming he was going to be long on Tesla. Came out and said, Tesla, great company. I'm here for the long haul. And then only minutes again selling his shares in Tesla after it got a few points bump up. He made $1 million and he walked away. This just one of the many millions he has manipulated the market over the years. And before you think he was with the group and the meme stocks of GameStop, it was actually just the opposite, coincidentally. He lost a lot of money fighting the short sellers. And in some sense, he said, I came into this to fight this institution. And in some ways, he's become the institution. The point is, and what Money Vehicle wants you to walk away with, is that headlines and news can be exciting. Mr. Left actually says Wall Street reporting is boring. I'm trying to be exciting. I'm trying to create entertainment. Excitement, entertainment lead to emotions, and emotions lead to poor financial decisions with your money. As we learned from Mr. Ben Graham, the investor's worst enemy is often themselves, their emotions. Money Vehicle warns against day trading because much of it is based on your emotions. If you do your own research and you're confident in your own strategy, well, then we wish you well. However, when asked about targeting stocks held by small retail stakeholders, people like you and me, Mr. Left claimed it was like taking candy from a baby. Show people you speak money. Remove emotions from your investment plan. Be average. Use an index to get started. And keep driving your money vehicle as we see you at the next stop.